most Asian markets advanced on Wednesday after fresh record highs on Wall Street, as investors were digesting news encouraging signs on trade talks between the US and China after Donald Trump said that the two countries were in the final throes of the deal. Earlier, China said negotiators for both sides had spoken on the phone and agreed to more talks. As a result, Japan's Nikkei 225 rose 0.4%, South Korea's Kospi index gained 0.3%, while Hong Kong's benchmark Hang Seng index added 0.1%. Meanwhile, China's Shanghai Composite dropped as much as 0.5% in early trading. Despite the subsequent recovery, the index finished 0.13% lower as fresh economic data showed that China's industrial profits declined 9.9% in October after a 5.3% drop in the previous month. In Europe, investors continue to express optimism over the trade talks, with upbeat consumer confidence figures out of France adding to the bullishness in the regional markets. The index hit 106 in November, its highest since June 2017, and up from 104 in October. Meanwhile, Germany's import prices fell at the fastest pace in more than 2 years in October. Prices decreased 3.5%, faster than the 2.5% decline previously. Investor sentiment has waned somehow towards the end of the European session. As such, the Pan-European Stock 600, which registered a 4-year high during the session, came down off peaks to end just 0.3% higher. Germany's DAX 30 climbed 0.38% to 13,287, while London's FTSE gained 0.36% to 7,429.78, and the CAC in France eased 0.05% to 5,926.84. On Wall Street, stocks rose for a fourth straight day to close at new records Wednesday. The markets were supported by decent economic data and ongoing hopes for a trade deal. The Dow Jones Industrial Average closed up 42.32 points, or 0.15%. The S&P 500 gained 0.42% to 3,153.63, and the Nasdaq ended up 0.66%. Of note, trading volumes in the U.S. were rather thin ahead of the Thanksgiving Day holiday Thursday. As a reminder, U.S. financial markets will be closed Thursday for Thanksgiving Day, and we'll have an abbreviated trading schedule on Friday. On the data front, the revised estimate of third quarter GDP showed that the U.S. economy expanded at a 2.1% annual pace versus a previous estimate of 1.9%. Orders for durable goods rose 0.6% in October versus forecasts for a 1.1% drop. Consumer spending rose in October for the 8th month in a row. Spending increased 0.3% versus a 0.2% increase expected. Meanwhile, the Federal Reserve's Beige Book reported that U.S. businesses have seen continued growth in economic activity, wages, and prices during recent weeks, and they maintain a generally positive outlook. Positive economic updates coupled with positive Federal Reserve estimates sent the dollar higher nearly across the board. As a result, the euro-US dollar dipped below the 1.10 handle, but stayed close to the psychological support. The USD-Japanese yen, meanwhile, jumped to 6-month highs at around 109.60 due to a combination of upbeat economic data and trade-related optimism. In commodities, Brent crude made further bullish attempts during the early trading, but was rejected from daily highs around $63.50 and accelerated the decline after the EIA data showed that crude oil inventories increased by 1.6 million barrels, while gasoline inventories soared 5.1 million barrels. Furthermore, production hit a record high at 12.9 million barrels per day, and refinery runs slowed. And as a result, Brent slid to daily lows around $62.45 and then recovered to the flat line and settled around the $63 handle. A widespread rally in the greenback added to the selling pressure in the oil market. In a wider picture, the futures remained stuck between the 100 and 200 DMA at $61.15 and $62.30 respectively. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.